The audio you're about to hear was recorded in Anchor. Learn more at anchor.fm.
Hello guys, and welcome back to another episode of the Blockchain Bash, the podcast where we don't bash blockchains but instead celebrate them. Today's date is the 15th of February 2018, and the first thing I want to talk about is that we have set up an Instagram for the Blockchain Bash podcast where we will be updating you on the market, featuring coins and tokens, talking about upcoming blockchain projects, all in custom graphic form that fits perfectly into your Instagram feed. Just search blockchain, one word, followed by the word bash. So our first story of the day is US corporate customers are being barred from Bitfinex's margin trading markets. Now, thus far, this is unofficial and is only being told by some Reddit users who say they trade large sums on the platform. But last year, Bitfinex announced that it would terminate its services to US retail customers in November. However, the company assured corporate customers that the restriction affects individual accounts only. So these traders are frustrated not only because they can't create new margin trade orders, but because they can no longer close positions that they have open. In such a volatile market, these trades could cost the companies tens of thousands of dollars in just a few short hours. So if this is true, I think Bitfinex is really messing up here. They can't just lock tens of thousands, possibly hundreds of thousands of dollars into a trade that the customers no longer want to be a part of. If this was a mistake on Bitfinex's part, I truly hope that they reimburse any investors who got their funds locked up in a trade that they didn't want to be a part of. Alright, so on to story number 2. The Bank of Thailand bans banks from cryptocurrency activities. The Bank of Thailand issued a circular on Monday asking financial institutions not to get involved in cryptocurrency transactions for fear of possible problems for the unregulated trading. These restrictions on banks are very similar to the ones in the US and the UK, who recently prohibited cryptocurrency purchases using credit cards. Paramin Insum, managing director of TDAX, says that this will have little to no effect on investors of cryptocurrencies within Thailand. Perhaps all that it will affect is how long it takes to open a new bank account, because the banks will be requesting more documents from people. In my personal opinion, this could have massive downside for the future of cryptocurrencies, but I think it is the right move to protect investors from these very volatile markets. For example, I know somebody that invested $3,000 on a credit card, and then subsequently the markets crashed last month and they lost a bunch of money. I did tell them to hold through the crash, and it seems to have paid off since the markets are slowly recovering. So now is the time where I want to prompt you guys to do some live call-ins, some live Q&A. You can just use the call-in function within Anchor, send me little audio clips, your opinions, your questions, whatever you like, and there's a chance you'll be featured within the next show. So on to story number 3, Japanese crypto investors flee capital gains taxation of up to 55%. Japan's cryptocurrency traders are bracing for the upcoming Japanese tax season, which runs from February 16th to March 15th. In Japan, all cryptocurrency earnings are required to be reported as miscellaneous income, incurring capital gains taxation of between 15 to 55% due to virtual currencies being legally classified as property. So cryptos are being taxed between 5 and 35% higher than capital gains made from stocks and bonds, which is causing a large number of crypto investors to jump ship and move their operation elsewhere. Some traders have also complained that certain aspects of Japan's present tax requirements regarding Bitcoin are unclear. For example, one man was able to reduce his taxable income by a few million yen, which is about $50,000 when using an overall average rather than a moving average to conduct calculations. So the tax code needs to be distilled and clarified in order for traders to be confident in their tax calculations. Now, to throw in my personal opinion here, yes, I think it is a good idea to move away from Japan if they are going to be taxing your capital gains on your crypto investments between 5 and 35% higher than when you're investing in stocks and bonds. That just makes perfect sense if you are a large crypto investor in Japan, and I think it's Japan's government's responsibility to figure out a more fair capital gains tax on crypto trading. So that is it for the second episode of the Blockchain Bash podcast. Remember to check out the new Instagram we set up. You type blockchain and then bash in the Instagram search field. Also, if you can, don't forget to call in for any questions, comments, whatever you like to be featured into the next episode. Thanks so much for listening. My name is Joe Potentier, and I hope to see you next time.
The audio you just heard was recorded in Anchor. Learn more at anchor.fm.